In these uncertain economic times, protecting your hard-earned money from inflation is paramount. Inflation is a persistent rise in the general price level of goods and services. As inflation climbs, the purchasing power of your savings diminishes. Finding savings options that outpace inflation is crucial. By doing so, you can protect your savings and ensure your money retains its purchasing power. Inflation is a silent thief that erodes the value of your money over time. Imagine you have £1,000 earning 1% interest. With inflation at 3%, your purchasing power diminishes. In a year, your balance grows to £1,010, but it buys what £980 did a year ago. You've lost purchasing power despite the increase. This is crucial for long-term savings like retirement. To combat the erosive effects of inflation, you need to find investments that generate returns higher than the rate of inflation. This may seem daunting, but several options are available, each with its risk and reward profile. It's important to remember that higher returns often come with higher risks. Before making any investment decisions, it's crucial to do your research, understand the risks involved, and consider your risk tolerance. Diversifying your savings across different asset classes is also a prudent strategy to mitigate risk. One option to consider is high-yield savings accounts. These accounts typically offer higher interest rates than traditional savings accounts, although the rates may still lag behind inflation in some cases. Another option is certificates of deposit, or CDs, which offer fixed interest rates for a predetermined period. Section 4. High-yield havens, savings accounts and CDs. High-yield savings accounts and CDs are excellent options for those seeking higher returns on their savings without taking excessive risks. These accounts are FDIC insured, meaning your deposits are protected up to $250,000 per depositor per insured bank, providing peace of mind in these uncertain times. High-yield savings accounts offer the flexibility of accessing your funds at any time, while CDs typically come with early withdrawal penalties. However, CDs generally offer higher interest rates than high-yield savings accounts, especially for longer terms. When choosing between high-yield savings accounts and CDs, consider your time horizon and liquidity needs. If you need access to your funds at any time, a high-yield savings account is a better option. However, if you can lock your money away for a set period, a CD can provide a higher return. Section 5. Exploring ultra-short-term bond funds. For those comfortable with a slightly higher risk tolerance, ultra-short-term bond funds can potentially offer higher returns than high-yield savings accounts and CDs. These funds invest in short-term debt securities, such as government treasuries and corporate bonds, which typically have maturities of less than 1 year. While ultra-short-term bond funds are not FDIC insured, they are considered relatively low-risk investments, especially compared to longer-term bond funds or stocks. However, it's important to remember that their value can fluctuate, and there is no guarantee of principal protection. Before investing in an ultra-short-term bond fund, carefully consider the fund's expense ratio, which can eat into your returns. Additionally, be sure to understand the fund's investment strategy and risk profile to ensure it aligns with your investment goals and risk tolerance. Section 6. Take control of your financial future. In this era of economic uncertainty, safeguarding your savings from inflation's erosive effects is paramount. By understanding the impact of inflation on purchasing power and exploring options like high-yield savings accounts, CDs, and even ultra-short-term bond funds, you can take proactive steps to preserve and grow your wealth. Remember, the best saving strategy is one tailored to your individual financial circumstances, risk tolerance, and long-term goals. Take the time to research different options, compare interest rates and fees, and consult with a qualified financial advisor if needed. Don't let inflation erode your hard-earned savings. Take control of your financial future today and secure your financial well-being for years to come.